You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, first day of December 2025. Thanks so much for joining us. Wherever you are, we're just glad to have you right here, right now. Hope you had a wonderful Thanksgiving, long weekend, quality time with family, friends. You care about the things in life that really matter. As you know, we do 2 live broadcasts every trading day. First one's our live training room, so that's reserved for members only, those who are taking their 1-week free trial. If you have not taken your 1-week free trial, Michael joins us at the top of the hour. He'll walk you through step by step how to take the trial. It'll take about 3 minutes of your time. Get signed up for the trial. There's no credit card required. Get your indicators indicating today. Trial will officially begin tomorrow morning. Live training room opens and will run all the way through next Monday afternoon. And don't against you. Take the trial. You are getting access to the live training room, but you're also getting access to all the stuff we do the other 22 hours of the day. See, we work around the clock here. We go to work Sunday night at 6 p.m. Eastern, and we grind it out all the way Friday afternoon at 5 p.m. Eastern. So, 2 hours, you have live interactive training. The other 22 hours, there's logic alert, concierge trade alerts, there's weekly trading zones. There's a lot going on. So for 5 consecutive trading days, we treat you just like you were already a member, so that at the end of the trial, you can make a well-informed, intelligent decision as to whether or not we do. That's coming up top of the hour when Mike joins us. Now, when the live training room ends each day at 11:30 a.m. Eastern, take a 30-minute break and come back for this broadcast, the noon broadcast, which is open to the public. It's everybody everywhere on planet Earth, internet-connected device. There's 2 different ways to join this afternoon broadcast live. Best way, you only have to do this once. To mytradingiq.com. Scroll down the page. There it says broadcast. Click the link, fill out the 30-second registration form, and you're done. Forward, what will happen is every trading day, you'll get an email about an hour before this broadcast starts. In that email, there will be a link. 12 noon Eastern, all you have to do is click the link in the email, and it automatically logs you into our platform. Benefit there is you have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from your desktop, but you still want to join live. And some days you'll be busy, so you can't join live, but you want to get caught up later. Do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN CFRN. It's the Christian Financial Radio Network since 2005. All you have to remember is youtube.com/CFN. And not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, also archive each and every day. Currently, there's over 2,900 daily episodes archived for educational pleasure. And if you're new to our neck of the woods, it's a great way to get to know who we are. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more, and literally see how we've evolved over the years, day by day by day. Obviously, you're not going to watch them all, nor do you need to. However, it is a great resource to have at your fingertips. youtube.com/CFRN. On the left side of the screen, you'll see our daily schedule for each afternoon broadcast. Dive right into our daily devotional. The topic we've been on for the last 25 days is sharing your faith, or learning how to share your faith. It's important. Our scripture today is Hebrews 10:25. Not giving up meeting together, as some are in the habit of doing, but encouraging one another, and all the more as you see day approaching. That was Hebrews 5. Today we'll talk about priority connections. Relationships matter, period. They provide the context for spiritual growth. Believers need an environment that is relationally rich. 3 primary connections. 1, a spiritual mentor, encourage and guide. 2, a group of believing friends. 3, a community of others. Believers need at least 2 out of the 3 connections to foster. Ideal environment is, of course, all 3. Little growth can be expected. The believer is functioning only one of the connections, and an isolated believer is trouble. We need to check our own environment first. Are we connecting with believers? Then, as mentors for others, we can help them make the connections they need. Like babies, believers are born to a family of Christ. So I encourage you to reflect on the relational connections of the newer believers that you know. Which of the 3 priority connections are you missing? What steps can you take to these connections? Let's pray. Lord, thank you for the gift of gathering together. Help us not to neglect meeting with one another, to show up with encouragement, love, strengthen our fellowship, build our faith, and use us to lift each other up as the day. It's in Jesus' name, and everybody said, Amen. And happy Monday. All right, let me give you the numbers around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Currently, the Dow down 195 points. The NASDAQ down 30. S&P 500 down 12. Russell 2000 down 18. The commodity basket. Crude oil up 65 cents. Trading 59.20 last. That's a gain well over 1%. Gold up $4, trading 4,259.10 last. Silver up $1.55, trading 58.73 last. That's a gain 2.75%. The price of silver moves $1. It's worth $5,000 per contract. At the moment, silver's up $1.08. Roughly $15,000 per contract traded since the markets opened last night at 6 p.m. Eastern. The Asian markets at the close. The Nikkei dropped 950, almost 2%. Shanghai rose 25. Hang Seng gained 174. The European markets at the close. FTSE down 17. DAX down 209, exactly 1%. And the CAC fell 5. So we had a mixed day in Asia. Red day. So far, it's a big red Radio Monday here. Survey. Let's take a look at the news. Today marks the 20th annual Cyber Monday, an online retail event that was the largest online shopping day in U.S. history last year, responsible for an estimated $13.2 billion in online retail sales. The shopping holiday dates back to 2005, when the National Retail Federation coined the Monday after Black Friday as Cyber Monday to promote traffic to e-commerce platforms like Amazon and eBay. Since then, the holiday has eclipsed Black Friday as in-person traffic has slowed. Retail outlets have expanded their online presence, and the two retail events have sort of just blended together. Companies today typically launch their sales for several weeks, advertising Cyber Monday as a last chance to save. Last year, the most shopping activity took place between 8 p.m. and 10 p.m. on Cyber Monday, during which consumers spent roughly $15.8 million per minute. Today's spending is projected to reach $14.2 billion. That would be $1 billion more than last year, surpassing last year's record as the largest shopping day in history. Lithuania's Vilnius airport closed yesterday for at least the 10th time since October, amid concerns of balloon activity. Closure comes amid a wave of airspace disruptions, primarily drones, in Europe in recent months, including Copenhagen, Munich, and Brussels. The government has blamed Belarus President Alexander Lukashenko, an ally of Putin, for the balloon incursions, calling them a hybrid attack involving smuggling cigarettes into Lithuania says it recorded over 500 balloons entering its airspace from Belarus this year and nearly 1,000 last year. Why don't they just shoot them down? It has previously closed its border with Belarus over the issue. Disruption comes as the UK, France, and Germany recently provided military support to Belgium's anti-drone operations after the country's main airport was forced to temporarily close due to drone spotting. Separately, U.S. negotiators met with European counterparts yesterday in Florida to discuss a revised peace plan in the country's. My concern is, I think we have a war in two countries, and I don't think either one of the leaders wants to see it really end. I mean, come on, Zelensky fell into more money than he ever dreamed possible because of this war. Putin, on the other hand, it's kind of a grudge match. He wants to put the band back together. SSR. I don't know. Moving on. NASA's Perseverance rover has captured what is believed to be the first evidence of lightning on Mars. Red planet joins Earth, Saturn, and Jupiter as planets in the solar system where the phenomenon has been observed. Unlike lightning on Earth, massive charge differences within storm clouds cause large-scale electrical discharge. Martian version is a low-energy type generated by microscopic dust particles. Mars' fine-grained and loose soil, regolith, is continuously whipped up by the winds, leading to intense dust devils and planet-spanning dust storms. As the tiny particles rub against each other, electrical charges build up into many lightning strikes. Scientists say the phenomena can destroy organic molecules and may explain why methane disappears so quickly in the Martian atmosphere. The dust itself is considered a significant risk to human exploration of the planet. Yeah, let's look at Wall Street. U.S. stocks sank today while Bitcoin slump deepened as Wall Street's strong late November rebound looked set to hit a speed bump on the first trading day of December. Yep. All the Magnificent Seven mega cap stocks, except Amazon, pulled back, led by falls of around 1% for Nvidia, Meta, and Tesla. Meanwhile, Bitcoin fell sharply, losing nearly 6%, and another sign that markets are kicking December off in a risk-off move. Cryptocurrency sank below 85,000 this morning, extending a weeks-long slide for bouncing to trade back above 85,000. Now, December is typically a strong month for stocks, but strategists say the so-called Santa Claus rally may not happen this year after a string of events, not the least of which they're blaming President Trump's tariff push, kept uncertainty high. I wasn't uncertain. Were you uncertain? Countries paying to do business with us like we've paid to do business with them. That's why they call it a reciprocal tariff. So I don't see anything uncertain about that at all. It's America getting money it's been cheated out of for decades because of weak, feckless presidents. Focus is still on the Federal Reserve's path for interest rates, even as over 85% of bets ride on a quarter reduction. The policymakers meeting next week. Thanksgiving week rally last week was fueled in large part by rising hopes for a cut and lower borrowing costs on the back of supportive comments from Fed officials. The central bank has now entered a blackout ahead of its gathering 10th of this month. Final FOMC 2025 is December 10th. And early last week, I told you that historically, markets rally into almost every holiday weekend here in the U.S., especially Thanksgiving and Christmas. And sure enough, it rallied until it didn't. Buy the rumor, sell the news. So, with the central bank in a blackout period, in other words, they can't say anything publicly, let you know which way they're leaning on the interest rate decision. Puts the spotlight on economic data to set expectations, rates, as releases continue to flow back to normal post-government shutdown. Today brought a reading on November manufacturing activity ahead of updates on services activity and the jobs market in coming days. The highlight comes Friday, late arrival of September's personal consumption expenditures PCE index. That is the Fed's preferred inflation gauge. So remember to watch for that this coming Friday. PCE economic report, that's typically released at 8:30 Eastern. Wall Street is also bracing for a potential change of leadership at the Fed. After a year of Trump butting heads with Fed Chair Jerome Powell, Trump said Sunday he has made his choice for replacing Powell. Trump didn't give a name, though. But it looks like White House economic advisor Kevin Hassett is the most likely, finally getting a new head. When it comes to AI, the mantra adapt or perish can take on entirely new meanings. You have to be in a mindset of always being willing to understand what you don't know, according to Hilton's CEO. AI will surely have its impact on the hospitality industry, according to the CEO. Joined Hilton over a decade ago and has helped it navigate the Great Recession and usher in massive new hotel growth. But for Niceta, CEO, embracing AI, challenging, likely end up being another positive industry. Hilton currently welcomes anywhere between 200 million and 300 million guests each year, according to Niceta, who cited productivity opportunities at both the corporate and in-hotel levels using AI tools. The company can do things efficiently and effectively with more information. And Hilton has gobs of data regarding customer experience, and he said AI is the perfect tool to assist them with it. How do you create tools when you're on property? It is so easy, it's in the hand, and you can customize your experience, he noted. However, some fear that AI will eliminate work altogether isn't complete. A recent report by MIT Sloan Associate Professor Lawrence Schmidt revealed that in some instances, roles declined by 14% if AI could perform much of the job's requirements. The report also underscored that automation had a significant impact, changing the face of positions such as management analysts, aerospace engineers, and computer scientists. According to the World Economic Forum, in this decade, AI will create 170 million jobs while displacing 92 million jobs. Around 40% of employers expect workforce reductions related to AI economic jobs, then it wipes out. Yeah, that's the big question. Treasuries fell as U.S. trading returned to normal after last week's holiday. A surge of new corporate bond supply to begin last month. Yields rose to session highs this morning, led by long maturity tenors after Merck & Company slated an 8-part bond offering that was 20, 30, and 40-year tranches. Government bonds globally were already under pressure as Japan's 10-year yield jumped to the highest level since 2008. Prospect of a Bank of Japan interest rate hike later this month. Wow, that's interesting. Japan had zero interest rates like decades. U.S. 10-year yield rose as much as 7 basis points to 4.9%. Shorter maturities were higher by at least 4 basis points. Merck's offering and about 6 others, the first new investment-grade corporate bonds in a week, kick off an anticipated $40 billion month, about half of which is expected this week. Robust market conditions allowed $1.55 trillion of supply this year. Bloomberg oil rose as a key pipeline linking Kazakh fields to Russia's Black Sea coast halted loading after one of its 3 moorings was damaged amid Ukrainian attacks in the region. While traders assessed potential U.S. military operations in Venezuela alongside expectations for oversupply. We'll go over the chart in just a little bit. UK has sealed a deal securing a 0% tariff rate for all UK medicines exported to the US for at least 3 years. Officials announced this today. In turn for the UK spending more on new medicines. Under the deal announced by officials on both sides, the United States government agreed to exempt UK origin pharmaceuticals, pharmaceutical ingredients, and medical technology from import taxes. The Trump administration said that in return, UK drug firms committed to invest more in the US and create more jobs. As part of the deal, the UK government said it will invest around 25% more in new and effective treatments, the first major increase in such spending in over 2 decades. Both sides called it a win. It's a win-win situation. Casinos proposed for a golf course in the Bronx, right next door to the New York Mets ballpark, poised to cash in on a lucrative state gambling license for the New York City area. Also, is this how Mondami is going to do it? Turn New York City into the next Vegas? The 2 proposals were recommended by licensing by a key state gaming board on Monday. The New York Gaming Facility Location Board Also called for awarding a license to Resorts World to expand its slots parlor located in Queens near the JFK Airport into a full-scale casino, table games, and other. Bally's $4 billion casino plan, city-owned Ferries Point Golf Course, also notably means President Donald Trump will also see a significant casino windfall. The Rhode Island-based company purchased the rights to operate the public 18-hole course from the Trump Organization in 2023. Promised to pony up another $150 million if it won a casino license. That guy could fall into horse poop out smelling like a rose. Yeah, I guess we should be glad he's on our team. Test in tomorrow's House special election in Tennessee. To the great people of Tennessee's 7th District, gave me record-setting wins in each of 3 elections. I am asking you to get out and vote for Matt Van Epps, Trump. Truth Social Post, yesterday. Van Epps, the Republican nominee, is running to replace Republican former Representative Mark Green, resigned from Congress in July to business world. Trump also heaped scorn on Afton Bean, the Democrat Tennessee state representative, seeking an upset in a district where Republicans have won comfortably. Matt is fighting against a woman who hates Christianity, away your guns, wants open borders, transgender for everybody, men and women's sports, and openly disdains country. Now, all of this is true. Trump said it, but I heard it. I heard her say it. Republicans have highlighted Bean's online footprint in recent days, including a podcast appearance in which she said of Nashville, home of country music, "I hate this city. I hate the bachelorettes. I hate the pedal taverns. I hate country music. I hate all of the things that make Nashville apparently an it city to the rest of the country. But I hate it. Nashville is the largest city district." In response to the resurfacing of the audio being said on CNN, "I was a private citizen. Nashville's my home. Do I roll my eyes at the bachelorette parties and the pedal taverns that are blocking my access to my house? Yeah, every Nashvillian does. This race has always been about something bigger. Yeah, getting rid of communists like you." Unbelievable. Last but not least, Luigi Mangione, and accused of killing United Healthcare CEO Brian Thompson nearly a year ago, is in court today in a bid to have key evidence thrown out. I mean, come on. We've all watched the video. He pulled out a gun and shot the man in the back. End of the story. Why do we have to waste taxpayer dollars on this kind of crap? We have a video. And this guy committed murder in broad daylight in front of the cameras, has become some kind of folk hero to the progressive left. Mangione's team is looking to block the Manhattan District Attorney's Office from showing or telling jurors about some of the items on his person when he was arrested. That includes a 9mm handgun. Really, we should exclude that gun he shot the man with on tape, and a notebook in which Mangione allegedly wrote about wanting to whack a health insurance executive. Yeah, let's toss that out. Mangione's lawyers argue the items should be excluded from evidence as police did not have a warrant to search his backpack when they arrested him at a Pennsylvania McDonald's nearly a week after the shooting. Guess what? They didn't need a warrant. They had a warrant for his arrest. Let's just tie up the courts. Life goes on, right? That's what they say. All right, Logic 247, that's our 24/7 around the clock E-mini service. We are in week 383. Now, it's not just E-minis, but also crude gold and silver. Over the last 383 weeks, we've issued over 21,000 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on simple market structure and a simple process we teach all of our passport holders. Valerie did the recap this morning at 6:30 a.m. Eastern, so she will update it this afternoon. She does each day. Since the markets opened last night at 6 p.m. Eastern, we issued a total of 14 alerts. Time Valerie did the recap, we were still waiting on the outcome of 7. So that gave us 7 actionable alerts, of which so far nothing has been stopped out, but it's very early in the week. Last week we had 13%, the week before we had 8%, and the week before we had 5%. Now, 383 weeks is a very long time. It's over 7. Those 7 years, we've issued over 21,000 individuals. Again, we've averaged on a basis 20% or less being stopped out based on simple market structure, a simple process we teach all of our passport holders. So, the purpose of the logic alert, not just for you to trade. I mean, which they had. If you, the real purpose is to teach you how to read a chart. You need to know where to anticipate resistance, where to anticipate support. And if you use the logic alerts properly, even if you never trade one, simply go through the process that I'll teach you. Drawing horizontal lines, pretty soon you need my alerts because you'll be able to read the chart just like I do. Logic alerts can come out anytime around the clock. Trade around the clock. We have traders. Day session is the night session, vice versa. Now, 183 weeks, obviously a very long time, over 7 years. Many years before we had Logic 247, we had our original service, concierge. Different in a lot of different ways. For the purpose of this discussion, I'll simply say they don't come out around the clock like the logic alerts. Posted as a static report 5 minutes ahead of the Globex open each evening. And occasionally there'll be a day where I have to post. I'm going to be a little late with the alerts, or for the most part, I'm able to get them out each night, 5 minutes. You see, this Monday session that we're in began last night at 6 p.m. Eastern. Some people think the week begins Monday morning at 9:30 a.m. Eastern when Wall Street opened. No. Globex markets open Sunday night at 6 p.m. Eastern. So all of our traders had all of these targets 5 minutes before the market opened. S&P 500, the Dow, the Russell, oil, the NQ, gold, and silver. And take note, we have rolled gold to the G6 contract and silver to the H26 contract. Again, when we go through these individual markets and you see these targets drawn out on the screen, just remember, all of our members and trial members had these numbers 5 minutes before last night. That charts. The S&P 500 E-mini futures daily chart. It's called. Back. Now, price always reverts to the mean. I don't care what you're trading. I don't care how you're trading it. Price always reverts to the mean. It's just a fact of every market. In our case, the mean is green. We call it the BBC. It's this line right here. Stands for bull cross. Prices above the green line, we're bullish, expecting higher prices. Prices below the green line, we're bearish, expecting prices. But as I said, price always reverts to the mean or pulls back to the BBC. This was a 4-day pullback that held. 1-day pullback that held. It was a 2-day pullback that held. 1-day pullback that held. 1-day pullback that held. A 6-day pullback that held and went on to put in a new all-time historic day and closing high. Then we got below the B. We had a a head fake short signal, big picture, and a week later, on a Friday, this was on a Friday where we both opened and closed below BC. Our calls for lower prices. Now off this one, we did get some lower prices. Then we turned right around and got a big picture bullish signal. It's highly, highly unusual. So, went from bullish, bearish, back to bullish, back to bearish, and now we're back to bullish. As you can see, from where we opened last night, up here, all the way down to the 62% fib extension and the black step line, we even spiked it a little. But we've rallied back Friday's high. Thought the markets were closed. No. Forex markets opened time Thursday night and traded right on up until about 1 o'clock Eastern on Friday. It's a thin trade, and you'll see that on the charts, but that's what happened. We had a very bullish Friday. Then we had a bearish Monday, which is about to turn into a bullish Monday. Okay. Now, if we close above Friday's high today, that's going to be real. Should watch this for potential resistance, 68.89, and watch this, 68.98, and then 69.12. And once we take out 69.82, it's clear sailing all the way up to the all-time historic. Keep in mind that right here, this was the all-time historic closing. Big difference between that all-time historic. Now, this market could come undone. Remember I told you when I gave you the numbers from around the world? This rally's pretty recent. Here's where we closed on Friday. So, I mean, we're not that deep in the red at the moment. Friday's high, 68, 63 and 3/4. Today's high, 68, 64 and a half. So we took out Friday's high by like 3 ticks. Very easy for price to work its back down to the 62, back down to the low of the day, and then find support around the 50% fib extension. Then as we open tonight session, I could see price running into C, and remember the pullback holds more often than it doesn't. And again, and when it pulls up from below, still holds. Now, all alerts are created on the 30 chart. There's nothing magic about 30 minutes. It's just the time frame I chose many years ago. They say if it's not broke, leave it alone. So I have. Now, vertical line you see on the chart. This is today, which began last night at 6 p.m. Eastern. This was Friday, back over here, Thursday, back Wednesday. Idea. Horizontal lines are the weekly trading zones. Now, the weekly trading zones are published Monday morning at 6:15 a.m. Eastern. That means all of our traders got the new zones this morning, 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. These are last week zones. Why? Alerts I sent out last night were based on last week's zones. Why? Because the new zones don't come out till Monday morning at 6:15 a.m. Eastern. So on tomorrow's broadcast, you'll see this week's zones on the chart. And every alert that I put out this week will, of course, be based on the new trading zones. The way it works with the zones, which we've published for 13 days, it's going to be 16 years that we've published the weekly trading zones every week. Price rallies up to a weekly zone, we expect resistance. Drops to a weekly zone, we expect support. Until proven otherwise. So, on Friday, this little run up, it didn't happen until we start moving. About 8 o'clock Thursday night. It's 12:30, and then that little red candle behind the vertical line, that was the close on Friday. So, this was the open last night. This green candle right here. Now, we're on a chart, so each candle is 30 minutes. Opened, price traded C. Now, as I've said, pullback holds often than it doesn't. 4, 5. Pullback held 6 times. Know that eventually it's going to trade, and it did last night. And it ran right down to the short target at 68.02. Now, see what that's based on? Just look at the horizontal line on the cursor. All right. Get it to the tick. The low was exactly 68.02. Market structure. I teach you when you begin. Now, when the market finds support, it's going to go look at resistance. And the pullback held. Gave us another leg to the downside. And this morning, street open, able to trade. See. Then we ran into this bearish cross that was created last night. Bearish cross, that's when the red line gets below the green and leads to an extended move. First time price revisits that area is almost always good resistance. So you see where the bearish cross is, right? Now look, 4 30-minute candles were held in check by that bullish cross. Finally out above it. First time up, sent us back down. Second time up, sent us back down. Finally broke. Next resistance you should be watching for right here, where it's the red. 68.55. High there so far. 68.50 and a half. Resistance right there. 68.55 / 56. You got this double top at about 68.64. Then you got the long target. Dow. So we opened last night, and just like the ES, popped. Short target. Actually, got below it a little bit, and red and falling turned to blue and climbing. And right here off the Wall Street open, and up. And the next 30 minutes, we ran right back down. That put us below the BBC. So then we pulled up, and so far that pull back, which is a pull up, to pull down or a pull up, the bottom line is the pull back holds, and it doesn't. And right now it's holding basically right at the short target, 7.5. Now, if the Dow gets wings, resistance there. On the short side, if we start to move lower, a potential support here, and then here, and over here where we had the bullish cross last Thursday. All right. Russell opened last night, and we dropped right to the short target, which, as you can see, is based off this cross. See that? Have a bullish cross. That's when the blue line gets above the green line. It's to an extended move. First time price revisits that area will almost always be support. That's exactly what support. Okay, support. Send the market looking for resistance. Black hell. Resistance will send the market looking for support. Short target held. Consolidated. Wall Street open, and we ran up, and we ran right back down. And we just kind of been consolidating sideways. Now, this high, see this bearish cross? See how, look at the horizontal line on the cursor. Do you see how it's directly tied to the high off the 930 open? Or nothing else. Okay. One of them. Zones. On the NQ. Last night. See, take a drop right to the short target. It's a low. 25,193. Oh, so we missed it by a couple. 193. I had it pegged at 189. Now the short target stuff this right. We're learning how to read the charts. So important. Most people are going to look at this chart and go, I have no idea why price stopped falling right there. Exactly why I'm showing you right now. Support sends us up to resistance. The pullback holds, sends us back down to short target. Don't quite get there. See right here where red turned to blue? See that? It's at low right. See it. Support is going to send the market looking at resistance. Well, on the way up, run into the bearish cross created early in the session. That pushes us back down right there. But this candle opened down to the BBC, the back held, egg, egg. Now, this high is this high from last night. Obviously, the next resistance will be there. Could see a pullback to the BBC before that happens. That the black step line is starting to right. As it crosses blue and climbing, you should expect a retracement back to the BBC. All right, crude oil.
All right, I'm here.
Oh, you are here? All right.
Yeah.
Okay, guys, we'll pick up with crude back. Michael's going to give us a recap of what happened in the live training room and do some live trading as time permits. And then I'll come back, finish the recap, and wrap things up.
All right.
It's good.
All right, thanks. Sorry. I get doing things and the last few minutes just seem to slip away. All right. Here we go. And just want to wait till Bitcoin comes back through. All right, well, it's too late anyway. Good. Yeah, I know it's the crypto stuff is getting slammed today. Good afternoon, everyone. Happy Monday. Today's the first day of December, 2025. Now, if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. When you click on that button, you can be brought to this registration page. Just fill it out. Now, when you fill it out and you take the trial, you should really try to get into the room in the morning. We had 3 people sign up for the trial yesterday, and none of them showed up in the room today. Anyway, just fill that out down here at the bottom. Make sure you give us a TradingView login ID. That is important if you want to have the indicators indicating on your desktop. Okay, indicating on your desktop, you could hit that. And that is how you take the free trial. Now, we had a pretty good day today, starting out the month of December. We're up $1,702 per contract this morning. If you're going to read the spreadsheet, you have to read all the CTC risk disclosures down at the bottom. Today on the NQ, we're up 163 ticks. On the YM, we're minus 10. On the gold, we're plus 115. And on the S, we're minus 17. Now, it took us a while to get the gold this morning because I stopped out on the S twice. And I don't get into all the detail, but I stopped out on the S twice and it took a little while to get to the goal. We actually did it in one less trade, and we're at $105 in profit, I think. Not sure about that, but Our last trade that I thought put us over was 20 ticks on the NQ, and that put us at $205. So that means we were at 105 on the trade before that. But it was pretty close. Anyway, this morning, I just go through this real 163 on the NQ, minus 10 on the YM, plus 115 on gold, minus 17 on the ES. Now on the NQ, that was our high of the day. 163 was the high of the day on the YM. The high of the day was plus 19. On the gold, 115 was the high of the day. And on the ES, minus 10 was the high of the day. Okay, so minus 17. Took 28 minutes and 18 trades this one to get to $205 per contract of 2,050. With 10 contracts on, and to a total of 44 trades with 8 stop outs today. That put us at 81% of our trades were break even or better this morning. On the month now, obviously it's the first day of the month, so it's 1702. And all this stuff down here has been checked by my fact checker, Michael. I think he's out there right now. I did have one error in it this morning, actually 2 errors in it this morning. These two right here were not. But on the year now, we're at $255,160 over 205 business days, averaging $1,244 per contract per 2-hour business day. Following the 24/20 blueprints, so far this year, if you were to quit trading when you get the goal for the day and add 1 contract per month, you'd be on your 12th contract now in the 12th month, 12th contract. So far this year, you would have only had to work just about 29 hours, just under 29 hours, and you'd be up $203,349, averaging $7,068 per contract per morning session. Okay. All right. Let's get in there and see the trades that we didn't do. Now, gold was our big one today. It was our big one. Let me hit the control and back button on it. It's all the way back there. All the way back. Scroll down, scroll down, scroll down. Just kidding. All right, our first trade in here on gold was a break even right there. Then our next trade was right here. We picked up 5 ticks on that one. And we had nothing for a little while. I mean, there were some trades in here, I think. Looks like there was a trade right here I missed. I grabbed that one right there. And we had, looks like we had 16 ticks on that one. That got us to 21. Then we had our first stop out. That brought us down to 6. Our first stop out on gold anyway. Then we picked up 11 ticks there. That got us to 17. Then we got a big trade somewhere. That one right there, we picked up 30. That got us to 47. And 10 more got us to 57. Now, the reason this has got that kind of a blue is because it wasn't off the midpoint there. I thought it was, but it wasn't off the midpoint. Then we got the 47 on that one. And then from 47 went to 57. And 57 went to 77. And 77 to 92. Then 92 to 97. And there's another trade in here. We went from 97 to 115. I think that was 97 to 115. There was a trade in here that I missed. We went from 92 to 97. 5-tick trade somewhere that I missed. I don't know where it was. But anyway, that's what we did. Now, gold was our big winner of the morning. We're $1,150 on gold alone this morning. Let's see. During the break trades, valid trades, it was 1 right there. There are not a lot of valid trades here during the break. There's some pretty good movement, just not a lot of valid trades. Here's one right here. That would have been okay. One right there. And that was it. A couple of valid trades during the break. All right, on the YM now, we ended up minus 10 on the YM. We're back and forth a little bit on this guy. Okay, so our first trade here on the YM, we picked up 1 tick. We had 3 more to get us to 4. And then we had 10 more to get us to 14. And then somewhere in there, we had 5 more to get us to 19. Where it was exactly, we had 5 more to get us to 19. And then we stopped out. That put us down to 4. We picked up 1 there to get us to 5. And then we stopped out, got us to minus 10. And that is where we ended it with the YM. Now, what trades did we have in here? That was a valid trade. This right here was a valid trade. So just a couple during the break on the YM as well. And the ES had our number today. This guy. Here it is from, we had a break even on that one. And we stopped out there, minus 10. Stopped out again, minus 20. Then we picked up 4 ticks to get us to minus 16. Stopped out again, minus 26. And we picked up 1 tick here, get us to minus 25, and then 8 ticks here to get us to minus 17. And that is where we ended up with the ES. Now, during the break, this right here was a valid trade. It worked out. That right there was okay. That was okay. That would have been a break even. The other 2 could have given you profit. This one could not have given you much profit. And that was it on the ES. So we ended up with minus 17 on the ES. Now the NQ, which we traded more than anything else today. Control and back on that. All right, so on the NQ, we started out here with 3 ticks. We got 1 more there that got us to 4. Then we had 13 that got us to 17. That's a weird number. 13 got us to 17. Then 1 more here got us to 18. And 1 more got us to 19. Then 4 more got us to 23. And 1 more got us to 24. 1 more got us to 25. Then finally, I think in here is where we had a bigger trade. We went from 25 to 45. And then we went from 45 to 90. And 90 to 135. That was there. And then 135 to 136. And then we stopped out. Right? That's good. Right. We stopped out, went down to 111. Then we went back up to 131. And we stopped out again down to 106. And back up to 118. And from 118 right here, we went up to 146. That's a pretty good trade. From 146 to 162 and 162 to 163. And that was it for the NQ this morning. Okay. See a little rule emoji. Thank you, Michael. And that was it for the NQ this morning. So now during the break, it looks like there was a trade here that would have been okay. A trade here that would have been okay. A trade here that would have been okay. All those would have been good trades. This would have been a stop outright. That would not have been a trade. That would have been a trade right there, would have been okay. That would not have been a trade. That would have been a trade right there. Okay. That would have been a trade right there. Would have eventually worked out. That would not have been, not have been, not have been. That would have been a trade there. Would have eventually worked out. And that was it on the NQ. So on the NQ, we ended up with plus 163 this morning. 163. Okay. All right. So for anybody who is coming in now on YouTube, if you haven't taken a free trial with us, go here to mytradingiq.com. Click on this right here. It's recovering some of it. So is that. Click on this right here. There's no credit card required for the trial. When you click on that, it's going to bring you to the registration page. Just fill it out. Make sure at the bottom you give us a TradingView login ID. Okay. Make sure you give us that TradingView login ID at the bottom. And then we'll be able to get your indicators indicating for you. Okay. All right. Now, let's trade. The NQ needs a down. It needs to hit the midpoint and give us an up close. It's already oversold. So it just needs to hit the midpoint and give us an up close. Okay. Everything else needs to move down and hit the midpoint. Slide this over, slide that over, that over, and that over. Here we go. Nothing here. We didn't hit the midpoint. Okay, now it's come out of the oversold, so we're not going to have a trade there. We're not going to have a trade anywhere right now. Let's go look at the big picture really quick. All right. It's recovering quite a bit here. I thought we were going to go down further than we did. I thought we were going to go down and hit the BBC today, but it doesn't look like we're going to. It recovered really well. I've got one more. This little guy is not recovering near as well as Bitcoin did. This on the bigger picture. It came back up and hit the BBC. Perfect 50% retracement of that leg down. It is due for a smash down right here, given what we know about the way markets act. There are supposedly some underlying factors, but you can see that was a perfect 50% retracement that bounced off the midpoint, or the BBC right there, and pushed down. Now, it hasn't put in a lower swing. If it fails to put in a lower swing, that would be good. It'd be like this one right here, failing to put in a lower swing. Okay, that would be good, and the timing's just about right for something like that to happen. This is lower than that over there. Crunched all the way up. Well, I guess you can't really see anything. Anyway, that is that little guy. Just looking at the chart there. Now, in the air, I guess that was a trade we just missed right there on gold. We need a down close followed by an up close over here on the NQ. It's going to happen. The up close has to happen immediately, though. It can't go down anymore. It's going to go straight up, I think. Straight up. Okay. If it does give an up close right here, it'll be a long trade. If it goes down any lower or closes down, it's not going to be a trade. It's going to be too far away. And there it is, too far away. The YM could be a trade. All right, on the YM, we need it down close, so I'll buy it up close. There's the down close. Now we need the up close on the YM. It's got a low here of 73, so you buy in the 83, like this. And make sure that window is on top. Okay. And we don't have anything here on the ES right now. We don't have anything here on the NQ. The ES needs a down close followed by an up close off the midpoint. Okay, the gold could turn into a trade. The gold needs a down close like it just had. Now it needs the up close. The low on gold here is 1.4, it looks like. Okay. Good tail right there. Looks like right there, 71. So on that, it's 2 now. So that should be 2. Okay, and the low on that was 71.4. So that was correct. And the low on this is 72, so we're buying 82 there. On the up close, there it is. We're filled on that. We got one tick a slip. The gold, we still need the up close on that guy. Okay. The low on that. It's down a little bit. The YM, we're just waiting for that to move. It's going to get stopped to break even. The ES is off the midpoint here. We could take a long on this right up here at 51. Okay, the gold now has changed. The YM is starting to get into the point where it's in profit. The gold, I'm going to slide this over here. The ES just gave the up close. The gold now has a little 0.3, so we're going to be buying 70.3. We're going to be buying 71.3. Okay. The YM just bumped the stop. Well, one plus 2 ticks on it right now. And the ES triggered. Here's the ES. And the gold just triggered too. Right, so we're out with a couple on the YM. The gold, we're in right here. We just jumped on. We're in right there at the slide the YM over. The gold is almost going to break even. The ES not quite yet. Okay, the gold just went to break even. I'm going to lock in 5 ticks on the gold. ES not yet. Gold should go up to 73.6. Right, we are out with 5 on gold. I don't remember what we got on the YM right there, but we got something. 5 on gold. Let's put this window on top. And I'll go see what we got on the YM. And we got a little bit on the YM. Oops. The ES will come back. It's going to stop me out again. The ES has had my number all day. Okay, let's go over here and here. And let's see. Okay, I got 3 ticks on the YM. I was trying to see what the heck it was. Hard to find. It was in at 82 and now at 85. So we got 3 ticks on the YM. 5 ticks on gold so far. And we'll see what happens here with this ES. Let's go in here. Afternoon session. So far today, 12:01. On YM, we have 3. On gold, we have 5. Here's a 2. This one. Copy that, paste it there. those were those two trades. We're still in the ES. We could have something coming up here on the NQ on the short side. Okay, the ES hasn't gone enough to do anything with it yet. And the NQ on a down close would be a short. There it is on the NQ. Here it is on the NQ. I'll get a point. And I'm out with a point on the NQ. I'm going to be sorry I did that. I think I had my order in the wrong place. I'm out with 1 point on the NQ. Okay, back in here. Nothing else has given us a trade yet. Does anybody have any questions about any of this? Joan, I feel like I owe you something. Did you ask me a question last week and I didn't respond, or ask me to do something and I didn't do it? For some reason I feel like I owe you something.
She was trying to get her Sierra charts hooked up, her Sierra DOM set up. I believe
that's what it was. We're waiting until the first, right? We're waiting until the first. I knew there was something hanging out there. Thank you, Dwayne, for remembering that.
She said she'll get with
you. Okay. Thursday sounds like a good day so far this week to me. Yes, it's back at break even right now. Could turn into something here. The NQ had a deep pullback and is starting to move up. The YM is starting to move up. The NQ is starting to move up. All right, the gold needs a down close followed by an up close. Here's the down close. Now I think it's too far away. The midpoint is at 0.6. That's going to be one tick away. And there's a nice number right here for the ES to be going up to. Right there, right there, right there. I think the DOM is suggesting the ES wants to go up. I put that order on the gold. Anyway, I'm going to go to one tick on the gold. I'm going to go, the ES is at. I'm going to go to one tick on the ES. All right. I'm going to go to 10 on the gold and 4 on the ES. There. All right. 10 on the gold and 4 on the ES. You know, if you guys just come to this session, you only go to this session, which is free, by the way, you would do all right most days. All right, so that was 10 more there. Finally got the ES to do something after almost stopping out. I guess that was on the midpoint there. All right. And the NQ has, I did this over here on the NQ and it's somehow got a point out of that. I think I had my order in the wrong place. And it's had nothing else since then. It hasn't gone the full cycle. Okay. All right. So we really had to wait it out here on the ES. You know, if I was a little less disciplined, I'd have gone to break even several times on that. And, when it was struggling there to get up above break even, it's just hovering there at it. You know, and the time that I have to actually trade in here. All right, on the gold, we could hit the midpoint and have an up close on the current bar. So this bar could be our trigger bar. It's not yet. But if it goes down one more tick and then gives us an up close, then it would be the trigger bar. Okay, otherwise, if it gives us a down close, the next one could be the trigger bar. There, it's gone down one more now. Okay, but no, that one would be a trigger bar. Just need the up close on this one. Right now, it's got a low of 2.3. So be buying 3.3, like that. Okay, the YM is going to be a trade here too on an up close. ES is not, the NQ is not. So as the low stays at 0.3 on that, we still have potential trade. As the low stays above, we still have potential trade. Here, 2.9. And the YM has got a low here is 79. It's going to be up at 89. The S has got nothing, the NQ's got nothing. So gold and the YM are the only trades right now. Gold just triggered. We're in the gold. Gonna lock in 10 more on gold. We're in the YM too. Triggered too. Lock in 11, 12, 13. 13 on the gold. Okay, and YM's not looking so good. But we got 13 more on the gold. Okay, the YM never won enough to get the stop to break even. Gold has just been killing it today. ES could actually give us another trade right here. What time is it? 129. I'm not going to do it. We only have 20 seconds left. The ES is about to give another trade though. 49.50 up to 51.50 on the ES. That still has some big numbers to get up to at 52, 55. ES does. Now, YM, we're in the YM, so I'm going to play out. And the S is about to trigger here. There, the S just triggered. And the YM is now into profit. Not enough to get the stop to break even yet. It needs to go one more tick, I think. Come on, get up there. One more tick. There it goes. Stop to break even plus a tick. Lock in 4 on that. And we get out with 4 on the YM. Okay. The ES actually just triggered too, but I'm not going to run that one. So 4 on the YM. 4 on the YM, and we had 13 more on gold. Right? Was it 13? I think it was 13. 7 trades altogether. And the ES is actually starting to go here too. I said I was going to play the ES trade out, but I got a doctor's appointment I got to go to, so I really can't spend any extra time here. But I think it's about to go to break even. It did just go to break even. So I'm going to lock in 1 tick on that. The S has had my number all day. I just want 2 successful trades in a row on the S is my record for the day. Just 2 ticks. Gold's about to trigger again. We're out with 2 on the S. I'm going to stop there. I'm going to stop. Okay. Go back in here. That is 2 more on the S. That puts us at 6 there and 8 trades. 0 stop outs today. All right. So let me hit copy on that. I'll run that down. Yeah. Huh. Well, that did not work out on that one. That's because this isn't a number. So the trade's taken on that day. So I guess we can't use that. That one. Or that one. All right, so today anyway, we're at 100%. We didn't have any stop outs today. All right, so this is how we're going to wrap it up for this session. 4 ticks on the NQ, 4 ticks on the YM, 28 ticks on gold, and 6 ticks on the ES. $395 per contract, $39.50 with 10 contracts. We took 8 trades in this session with 0 stop outs. It's pretty good for 15 minutes worth of work. Telling you guys, this session is free. If you just come to this session each day and just follow along, it's good stuff. All right, With that, we'll go here now. If you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button. There's no credit card required for the trial. Just click on that purple button and it will bring you to this registration page. Just fill it out. Make sure you give us a TradingView login ID down there at the bottom. Okay. All right. So I probably should have started doing this a long time ago, haven't we?
Yeah.
Keeping track of the afternoon session results.
Absolutely.
All right. Well, I should actually keep track of the number of minutes we have in the afternoon session. Today we had, I think, 18 minutes. Anyway, with that, I'll pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. And if you are ready.
Yeah. Recap of the session.
Today it took 28 minutes and 18 trades to get to $2,050 with 10 contracts on.
Good job.
Thank you very much.
Good luck with your appointment.
Yeah, thanks. My first one in years. But the blood results came back all right. All the lab results came back. My HDL and LDL are a little off on each end, but just a little bit. And the liver thing, which was most important years ago, is the liver of like a 12-year-old boy. So it's all good. All right. That is it, guys.
Okay. All right, guys, we'll pick up where we left off on gold, crude, gold, and silver. On the G contract, silver on the H contract, and crude. So, we had a huge gap open last night, but 30-minute candle, we opened here, backpedaled a little bit, and all the way up to the long target resistance, and closed 30-minute candle just below. So we had a leg. After a leg, a retracement. Pull back to the BBC or a reversion to the mean. And as we've already covered in today's broadcast, as we do every day, the pullback holds more often than a price always reverts to the mean. In our case, the mean is mean. C, above, bearish below. Now, we had the gap higher open, continued to run, back to the BBC after we hit the target, back held, it was a candle pullback. See, both those candles are touching the green. Support sends us to resistance. Once again, at the long term. Consolidate at the long target. And a high on the session at 59.97. Right here. See how blue and climbing gets above price? That happens, it becomes resistance. Also, I want you to look at it from this perspective. See how you got all these bricks sticking to the upside? That's a sign of weakness. You got buyers trying to push price up, but it won't stick. You got a high. Once blue and climbing turns red and falling, down. Right to the weekly trading zone from last week. All alerts that go out Sunday night are based on the previous week zones. So we consolidate for the candles at the zone, take a drop, right to last night. This gap has not been filled. It's low right here. It's 58.84. It's low. It's 58.83. One tick difference. This is what I mean about market structure. This is what I mean about reading the chart. Okay. A lot of people looking at this and go, dang, falling. Why did it suddenly stop? Just look left. Remember, the market opened red last night, tried to go lower. It gapped open here, tried to go lower. Buyers came in. Buyers liked that price. They supported that price. They still do. So now support is going to do what? Send us to resistance. Poke it 1, 2 times. Now, you see these wicks sticking up that led to this. Now you got these 3 wicks sticking up that led to this. Now, here's the difference, okay? Here, had red and falling down. Coming off those wicks, you fell into the arms of support at blue and climbing. Support, 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 and now, by golly, back above the BBC. Resistance right there. 944. Trade of 59.45 to 59.55. That would get you your goal for the day. It's cutting it a little close. I might go look at a different market. If you only trade crude, that's definitely a trade. Trade multiple markets, then I would go look somewhere else. Again, 5.55. Your goal for the day. This high right here. Expect resistance is at 40. And sometimes you'll spike resistance by just a little bit. Okay, gold. Like to rally on Friday. And we close the week right at the weekly trading, right at one of the weekly. Then we opened last night right at that zone. New zones don't come out till Monday morning at 6:15 Eastern. That's why you're seeing last week's zones on the charts today. Tomorrow you'll see this week's zones on the charts. So they come out at 6:15 a.m. Eastern. They're stone for the entire week. Change any whatsoever. Chef, you just posted. This is a place of the chart that I am just not clear where distance. Okay. Which chart were you referring to? I'll show you. Tell me what market. Just type it in. ES is the one I started with, like, beginning of the broadcast. But it doesn't matter. See right there, I pointed this out at the beginning of the broadcast. Right there where blue turns to red, you should expect resistance there. Right here, you expected resistance because of the bearish cross. Red line gets below the line. It's to an extended move. This took us right down to the short target, to the tick. 6802, short target. Bounced us up to the BBC resistance. Sent us back down. Red turned to blue. So you should anticipate support there. Then as we trade through, see this time. This pullback held, and this pullback held, this pullback held, and this candle we trade through. Left, we see we had a bearish cross early last evening. Have a bearish cross that leads to an extended move. The first time price revisits that area will almost always be resistance. One candle, 3-minute candles, and then on the 5th one, finally broke through that area. Next spot to look for resistance was right here, right where we're at. Okay. This candle got like a 1-tick wick point up. This candle's got a several tick wick point down. Cursor right between the two. That's the resistance we're up against right now. Next resistance will be right here, which is really already there. 68.55. 68.60. Then the high of this candle. This is the high of the session. 68.64.5. Did that help? Covered the Dow. We already covered the Russell. Same thing with the Russell. Got to the area, cross, and found resistance. Now, where should you expect resistance? Right at the top of this candle. Just touched. After that, top of that wick. And where you have the bearish cross. So I would not be looking to go long here until we break above. Then you got potential resistance right. 500. Again here, 502. And then again right here, 2505. I would let, if I were going to go long on the Russell, I would let price get above. See, this was Friday. This is back over here is Thursday. I would let price get above this. See how this high from Friday was this exact same high Thursday. Kind of hard to see the wick sticking up behind that vertical line, but it's there. And the support. This area. But you've got this bullish cross, right? That's where the support came. Line gets above the green line, it leads to an extended move. First time price revisits that area. Must always be good support. And sent price all the way back to the BBC. Sent us back down to the short target. Then popped us up. Didn't quite make it all the way to the bearish cross. It's an area. I mean, another tick or two. And by it. Now we're coming up to challenge that area again. So now you've got, this was your first reason to expect resistance in this area. Now here's your second reason. And right here, you got a pointing down and you got a tick wick up, cursor right in between the two. And if we break the high of the day and if we take out the bearish cross, that's where resistance should be. Okay, so we covered everything but right at the zone. We made a run right up to the target, back to the BBC and the zone. Support 2. Price pulls back to the BBC. We expect support. Expect the pullback to hold till proven otherwise. And when price drops to a weekly trading zone, expect support until proven otherwise. That support sent us looking for resistance. And this little double top took it out. This wick and this wick, but it didn't stick. You got these two wicks sticking up in the air. That's a sign of weakness, and it took us all the way back down to the zone. Price drops to a zone, we expect support, support, support. Support has now bounced us up to the BBC. We've gotten above the BBC, about to hit that long target again. And silver. This was the open last night on silver. And by the second candle, so we opened last night on silver at $57 and up 95 cents. A $1 move in silver is worth $5,000 per contract traded. Now, this next candle actually up to 805. Top of this candle, you had a $5,000 per in an hour. 7, 8. That is $5,000. So then we went a little higher. Tracement back to the BC. Now you can scroll way left and see why the market found resistance here. Price pulls back to the BBC, the back hold, and sends us up one more time to the line. Finally push on target. Back to the BBC, support, leg, placement, and it looks like we're perhaps going to go try and challenge the high of the session, which is so far 50. Wowza. All right, back to the daily chart of the ES. Talked about today's high, 64.5. Friday's high, 63.75. 63.75, 64.5. So today's highs 3 ticks higher. But fine, this was a red candle all spiked like step line and the 62% Fib extension. These are the Fib retracements over here. These are the Fib extensions. Resistance, same support, at a doji, got blue and climbing chasing price. So if we take out today's high, next area for potential resistance is at 68.75, 68.80, 68.93, 69.01, 69.12, 69.20, the all-time historic interest. If we take out this little hump, sailing at this point. Now we continue higher. Oh, we're gonna run into resistance here and here. That doesn't mean we can't trade through. Take a day, may take a couple days. If we continue Market is trying really hard to put together a Santa Claus rally. Just against the backdrop, I don't see how it's even possible, but long ago not to argue with the markets. Me, 20% of the time or less, any alert I put out, stopped out. 21,000 alerts, 7 years. Average has been on a weekly basis that 20% or less of the alerts stopped out based on simple market structure. And the process we teach all passport holders. So far this week we're at 0%, but it's only Monday morning. Last week we finished the week with 13% stopped out, the week that was 8% stopped out, and the week that was 5%. Become a member, email Valerie, support@cfrn.net. No, you want to become a member. She'll send you the information you need signed up. You're all signed up. She'll send you a lot more information. Create a folder in your email client, and every email she sends you, just put it in. You will need it. At the beginning of your learning journey, you may not even know what some of it is. Trust me, didn't know you're going to need it, we wouldn't send it to you. Just put every email in that folder, just drag and drop, okay? Then when you get to the point of the journey where you do, oh yeah, oh that thing. Once you're an official member, passport holder, 2 hours of live training every trading day in an interactive environment. Get private one-on-one mentoring, no extra charge, you just got to ask. Strategy you learn, the indicators you own, passport holder, all markets and all stocks, futures, ETFs, it doesn't matter. Price flows the same across all markets and all time frames, just as I've shown you today and every day. Support to resistance, back to support, back to resistance, and it's a never-ending cycle. As a passport holder, you'll get the Logic 247 alerts around the clock. Teach you how to read the chart. Get the concierge trade alerts the second they're published each evening, typically 5 minutes ahead of the Globex Open. Monday morning at 6:15 a.m. Eastern, you get trading zones. Once they're published, they're stone for the entire week. They don't change any way whatsoever. Be able to attend the members only workshop every Thursday night. And you'll get the golden keys that open all the private channels and everything a trader needs. Email Valerie. Ask her about that monthly special. Let's wrap it up with our word today. Emotions matter to God. Ephesians 4:30. Let all bitterness, wrath, and anger, like Jesus, we have been created in the image of a God who expresses emotions. Neither the Father nor the Son was afraid or embarrassed to feel deeply. Shouldn't be either. Scripture, God's heart broke for his wayward children. Isaiah 11. Jesus wept openly at the grave of his dear friend Lazarus. He expressed righteous anger over moneylenders defrauding applauding worshipers in the temple. 1940. When it comes to our own feelings, we are neither powerless pawns nor fearful. God wants us to understand their message and seek His counsel in engaging them for His glory. The psalmist often voiced his emotions. In Psalm 22:1, he cried out, "My God, why have you abandoned me? Why are you so far away from me? Help." Think how he must have felt to say those words. Intense fear, panic, disappointment, and betrayal. Note what he did with his emotions. Took them to God, addressed Him personally, called on His help. "Do not stay so far from me. Trouble is near, and no one else." David's approach was bold, and he found the help he needed. He has not ignored or belittled the suffering of others. He has not turned his back on them, but has listened to their cries for help. Bring your feelings to God. Find that all who seek the Lord praise Him. Hearts will rejoice. Lasting joy. That's our good word. Thanks so much for tuning in. Wherever you are, God continue to richly bless you. See, I'll see you.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.